John Moret from J.E. Moret Grain Company is our corn and soybean market analyst this week. The USDA is expecting a smaller corn crop than it projected in August, but a bigger output in soybeans. The agency's September crop report, released a week ago, trimmed corn yields by more than a bushel and slightly increased soybean yields. For Nebraska, the USDA is estimating corn yields at 184 bushels per acre, 3 bushels lower than last month. However, the agency believes the state's soybean crop will be the best ever, both in production and yield. The expected average yield of 56 bushels per acre would be the best on record for Nebraska and the highest in the nation for 2015. We discussed the latest numbers with John here around noon on Wednesday, but started by asking for an update on crop conditions in his area of northeast Nebraska.
Jeff, they're excellent. You know, we've caught some rain, we've been able to irrigate a little bit, and the weather's perfect. So conditions really couldn't be much better.
Harvest has begun?
A little bit of soybeans getting cut. Guys kind of thinking about some high moisture after we get through with Husker harvest days. So
the USDA released some data this morning on prevented plant acres. They released it twice. What did the data show?
You know, the first one showed prevent plant down in about a half, and so it was half of what it was 2 months ago. And then quickly people said that looks a lot like the data from 2014. And so by 7 o'clock, people had kind of said, hey, wait a second here, this doesn't look right. Let's take another shot at that. So at 9 a.m. this morning, they released the correct data, which showed a little bit less than the last time they reported it. So overall, I think the market was expecting maybe a little bullish surprise from it or support from it. Didn't get it, so we're chopping a little lower today.
Let's talk about Friday's report. First on yield. Lower corn yield, increase in soybean yield. Do you think that's appropriate across the country?
I do. I think if you look at conditions, we've tried to force the conditions lower the last several weeks, and every week they've stayed right here, stronger than anybody anticipated. But you've had rain, Jeff. You've had rain. You've got a natural dry down process here that has kept us extremely good in ratings. And so you're going to see a yield that was a little less than the average guess, but still very good. So I think it's about right. I really do. I don't have any problems with it.
In Nebraska as well?
In Nebraska as well. You know, that's still a record crop, Jeff. Am I right? Is it 181 or 182?
So the soybean crop would be a record crop at 288 and a record yield as well. And that's a big soybean growing area up in northeast Nebraska.
It is. Yes, it is. And I think we're okay. We've had some rains. I think they were spottier to get this great big Nebraska yield. Nationwide, I believe it. Nebraska, I may have a couple questions on. So,
all right, let's talk about the stocks numbers. Any surprises there in Friday's report?
Nah, not really, Jeff. I think it makes sense. I don't have any problems with what the government's put out. I think you can find analysts that think the corn's not there, and it doesn't feel like it's there, but it's there.
Do the world stocks number give you any indication of bullish or bearish as we go forward?
It's a little bullish. I mean, we're using a little more than we expected. Just because the United States isn't exporting doesn't mean that Brazil isn't. And Brazil has been extremely busy the last 6 months, and really the last couple of years, gearing up for this. Yeah. So they're in the driver's seat. They're exporting and doing what we did 4 or 5 years ago. So
you hinted at this when we talked last in May that maybe this was a different year for the soybean market and the Chinese buyer was going to be able to be very selective about what he bought. Is that coming to fruition?
It is. It's really close, actually, Jeff. And thanks for setting it up.
Yeah, no problem.
But no, they've been really patient. They're 70% open for November. They're about 100% open for December, and they're done with October. So they've been able to play really patient and buy the spots they needed to. They bought some this week from the U.S. They've also bought some from Brazil this week. And so they've continued to be able to just come to the table, and we've squished our margins on the export side, and we've squished our margins on the interior, and China has won this round. So
how concerning is that for overall demand for soybeans?
I think the demand's still there. We're still going to export a lot of soybeans. It's just they're going to come at a different time. We've been front-loaded the last 3 or 4 years with soybeans, so we know what the book is coming in the 1st of October. This year, there's a big question mark. The USDA still has us exporting a lot. We're still going to get there. But it's going to come at a different pace than everybody's comfortable with.
All right, before we talk about corn and soybean prices, tell me where basis is in your area.
Basis is basically normal, I'd call it, Jeff. The old crop corn's 25 to 35 under. The old crop beans, which we're there now into the new crop, is going to be around that 60 to 70 under range. So we're at what I would consider harvest levels, especially with the flat price being where it's at today. So
any problems getting rail cars this year?
No, it's completely different, Jeff. And of course, you've seen the layoffs at the Burlington Northern. You've seen the layoffs at the UP. There's concerns there. A little bit of it's the oil, and some of it's the demand. There's just not a lot of stuff going on today. But cars are easy to get. We'll see how we start up on this harvest here. There's some beans coming, as I talked about, but we're not full steam for a couple weeks here yet.
All right, give me your analysis and your outlook for corn prices.
I think corn's going to spend a lot of time between 3.25 and 3.75, Jeff. And this week we tried to poke back up towards that $4 mark on the futures, and we gave it up. We're giving it back up yesterday a little bit, and today we're seeing some of that as well. So I don't think we've got buying to hold us up at these higher levels.
what level would you be aggressive at selling then?
I think if we can poke above the $4, you do it. And I think if you can start to see the South American crop unfold and they're growing, they just started putting soybeans in the ground today, that'll really be the key to go off of for the next 6 months. But $4 is a good price.
Give me the soybean outlook.
Soybeans, I think, are going to bounce a little bit here short term. We're going to see the Chinese demand. I think it's going to outweigh the farmer selling. And I think we're going to pop soybeans, 25 or 30 cents here. But I think you got to be careful, because when the farmer goes to the field, and if he's got record in a lot of areas, I think that's going to be his crop to sell. And so I would think that we'll be $1 less than this in the next month on soybeans, and then we'll find our lows from there and play the weather game.
Do you like anything in 2016 for either corn or soybeans?
Corn, hands down, is better money, Jeff. I don't really care where you're at. You can go to the incremental areas, but corn is going to be the better money. And so something needs to give here, because as I talked about, there's beans still leaving the country. We can't go to 0 acres of beans next year. We're going to need to do a little fighting. So look for corn to probably drop a little bit, and beans, even though I said they're $1 cheaper, they got some work to do.